Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for April 5th, 2010. This is Patrick Ceresna. As always, we start off with a look at the S&P 500 using that spider exchange traded fund symbol SPY. We split up our focal points to identify the highs and low points that are important to the current ranges within the marketplace. We continue to believe and stand by the fact that we are well overdue for a market correction. Markets always advance 2 steps forward, 1 step back, and at this juncture, anyone who remains along this market may continue to participate on some upside. But if you even look back at January, when a sell-off begins, in 1 or 2 days it wipes out even an entire month's worth of progress. So at this juncture, we continue to maintain that even if the market was to make that thrust up toward the 120 area on the upside of the spider, whether we get that break or whether we get the reversal here, at some juncture we do need to have a market consolidation. That doesn't make it a bearish thing. It's simply the fact that the markets can't advance in a straight line higher. If in fact we have a sell-off and it's very well defended by the bulls as it comes down into those zones, that would be a springboard from which another big robust rally could begin, respecting all sorts of trend lines and other things in place. But at this juncture, we continue to maintain that the risk of being long this market is not worthwhile without having some put protection or some other thing in place to ensure that your downside risk is hedged. Next year, I want to take a look at the ISE U.S. Regional Banks Index, which is a symbol JLO. We were talking about the overhead resistance right here on the regional banks in this 24-25 range. That is a completion of a measured move. We now are going 2 weeks into a sideways consolidation here. Sideways consolidations can become a springboard for another move higher. At this stage, we don't want to forecast that move just yet. But if we have any technical breaks above 25, then at that stage, theoretically, we could still see another push even up into the 26-27 range. But first and foremost, until a breakout occurs, we are suspicious of this being a topping formation and at minimum a correction coming back down toward the 22.5 to 23 area on the downside. Again, not making it particularly bearish, simply a retest of the trend lines before we see any progress higher in this. But again, that downside kind of a forecast is something we're suspicious of. But if we have any technical breaks that are holding properly above the 25 area, we can visit the idea that maybe there is another leg that can maybe push up to the 26-27 area. Next year, I want to take a look at the ISE Sindex, which is the symbol SIN. This is the index of all the casino, tobacco, and distiller companies. And after spending a week consolidating just right at or slightly above the 109 to 111 focal point, we had another bullish push that broke out higher on Thursday, going into the long weekend. At this juncture, if we don't immediately reverse that candle that broke out on Thursday, we may see follow through to test those the high points of around the 114, 115 area on the upside. But again, we want to see that that this breakout actually holds. If we have a red candle come in on Monday, throwing it right back into the 109 to 111 area, then it was a false breakout. Next year, I want to take a look at the ISE Home Builders Index, which is the symbol RUF. We identified last week this 11 to 1120 focal point, suggesting that that should act as overhead resistance, and any technical breaks above there could thrust maybe as high as only 1140 before we still see some sort of corrective pattern. This week brought in some selling midweek and reversal right off that 1120 zone on the downside. We are already approaching and very close to the natural retracement on this move. So we could theoretically even just see another 10-15 cents more on the downside to have completed a proper retracement, and at that stage the index could become bullish again. It'll be very important to watch what the price action is and how it works. If we get down into this blue zone and the bulls don't defend it very quickly and create reversal candles, it could obviously become much bigger selling, but at first we're going to just treat it as just a natural retracement, which will eventually break out higher again. Next, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. The selling has gotten quite intense on the downside. Last week, we were suggesting that the previous lows in February around that 99 to 101 level could act as temporary support for some sort of a flag or retracement back. That flag became actually a very strong reversal, which is now thrust right into the retracement zones. It'll be very important to watch what happens in natural gas in the upcoming week or two, because if in fact all rally attempts are contained to this 106 to 110 area, we could very easily roll down and even break down to test all the way down into 94, 96 on the downside. But in the same regards, if we continue to see bullish follow through on this reversal, especially if it can get above 110, then that would have fulfilled the bottom end of the range. So again, watching the next few dollars in here will be critical to determining whether or not there's another significant leg down here. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. We had a very bullish candle breakout on Thursday, which has now had a close with right above all of the previous highs on this. And if you just look at the last 5 candles there, what will be critical coming in early this week was to see whether or not the bulls can actually hold that breakout candle. If that candle immediately reverses with a big strong red candle reversing the breakout attempt, then it would be a false breakout. The same regards, if they hold it there or go slightly higher on a Monday and Tuesday, then it would actually count as a breakout that could easily push as high as like 586 to 592 area on the upside. That's the next measured move higher. So we're going to be watching whether or not the FTSE can actually maintain this bullish break. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.